with Basant Maheshwari, the author and portfolio manager, Maheshwari Wealth Advisors LLP as well. Basant, hi, very good morning. Last trading session of 2022. It's been decent for the Indian market, especially when you look at it in context with what's happening across the world. But what about 2023? Because if you look at the other analysts, they believe that it will be a year of, let's say, no return or very low returns. What's your call?
No, I think 2022 was a bad nightmare for the general market as such. Of course, when you look at it relatively, it appears that we did well compared to what the Dow is doing or what Nasdaq is doing. But overall, I don't think too many people ended up making a lot of money on the portfolio basis. No? You might have had a couple of stocks going or go up here and there, but on a portfolio basis, at least we struggled with 2022. But 2023, we are hugely and outrightly very optimistic and bullish because the reason that led to a normalized or a less than normalized or maybe negative returns in 2022 were interest rates. And 2023 interest rates cannot be at this point. So I think sooner rather than later, you will have the much awaited Fed pivot on interest rates. So all you need is a couple of more bad data for the US economy. And I think the US drives the entire globe on that. So I think 2023 should be very good. And the stocks and sectors that did bad in 2022 should actually do better in 2023.
So Basant, when we just talk about financials, recently we've seen a resurgence of investor interest, whether it's a mid-cap banking name, especially after IL&FS crisis. You never saw mid-cap names in the banking and financial space do well. What is the market telling you?
Hi, Pankaj. Pankaj, the thing is that even with these mid-cap banks, the PSU banks, if I might call it, maybe a Bank of Baroda or a Canara Bank or all of these mid-sized PSU banks, which have actually made money for investors, no recommendations here. They were all doing a one-side value readjustment. So stocks make money over the long run when there is growth, when the bank expands business, does more lending. But this was a one-time value adjustment for most of these things. So I think the mid-sized private sector banks, we don't own it. So I can talk about a name like a second-tier private sector banks. They would do much better in 2023 because those were the ones which were showing some growth, and I think that's where the focus should be. But I think banks will do well, financials will do well because in a low interest rate environment they're supposed to do well, and the much talked about trades I think will take a backseat maybe. I think.
In terms of e-commerce or the newly listed space, they saw a lot of supply coming in because of unlocking of private equity who were able to sell. Of course, these are technical reasons, but they have had an impact as far as pricing and valuation is concerned. What do you make of that? Do you think that's a space to look at now?
E-commerce, it's not about supply and demand. When the sentiments are good, all supplies get absorbed. When the sentiments are bad, there's just complete lack of demand, and even a minuscule supply breaks the back. So I think the e-commerce plays, the internet plays, they're more of a Nasdaq derivative. The Nasdaq is doing terrible at the moment. It was most of the stocks there are down 40, 50, 60%. So we might get reasons of bad supply. Maybe the profits will take 2 more quarters to come. But I think it's more of a Nasdaq output. You don't look at these stocks in isolation. So we look at reasons because when the market falls, say a stock you're holding, it falls 7%. So first thing you call and say, "Kya koi khabar aayi hai kya?" There is no khabar. It's just that these stocks are not strong right now. So if the Nasdaq does well, these stocks will do well. If they don't do well, these stocks will not do well. But for the long term, obviously it's earnings, it's about cash flow, it's about how they expand business, but that's for the long term. In the short run, the markets are blind.
Good morning. And as we're stepping into the brand new year, any resolutions in terms of the market that you'll say that now is the time that I didn't do this and now I'm going to focus on this, say, looking at small caps more closely than the large caps?
No, the biggest resolution is don't be a Rambo in the market thinking that your stocks will deliver earnings and they will go up. If the market falls, everything will fall. I mean, this took me maybe about 3 decades to understand and really accept it in reality. But no matter how good your company is, no matter what earnings they deliver, if the underlying market is collapsing, your stock will fall. So this is the new revelation. I mean, you might say, what took you so many years to understand this? But that's how it is. In Hindi, we say, jab jago tab savera. But yes, on another note, I think 2023 will be the year for mid and small caps because the large caps have had a rally. The mid caps cannot be left behind. It's like the parents running far ahead than the children. The parents just won't leave the child and move away. They'll wait for the child to catch up. And we've seen that in the past. But for small and mid caps to do well, you want sentiments to be better. You want the Fed and the RBI to cut interest rates or at least pause or give a dovish outlook. But that's when they will do well. Mid caps are already doing well. It's the turn and the chance for the small caps.
Small cap definitely underperformed this year with a cut of almost 14% at the index level, while the Nifty was up 5% for the year. And that's really trickling down at the portfolio level, as we were pointing out. But the other thing Basant you said was that this would be a year of a bit of a contrarian view in terms of what underperformed in 2022 is likely to do better in 2023. Does it then make a case to, let's say, buy the IT companies, pharma names, etc., that had been underperforming and book your profits in PSU banks?
You've already been seeing in the large retailer, the consumer facing companies, they're already seeing some kind of a sluggishness. I wouldn't just slow down, but some kind of a sluggishness. They're overowned. So the money seems to be moving back into the sectors that were really mauled in 2022. IT, I think, should do well. We've been holding IT for the last several months. They've not been moving. They go up, they come down. But I think 2023 should be just like Pankaj mentioned about the e-com companies. I mean, the IT also, you might say that this company has growth and that company doesn't have growth. This is free cash flow, but it's all about the Nasdaq. If the Nasdaq bottoms, IT will bottom. If the Nasdaq doesn't bottom, IT will again struggle. The Nasdaq is all about interest rates. If the Fed comes and stops the interest rate hikes, they will do well. So it's all related directly, indirectly to what Jeremy Powell would do next month or next quarter.
Okay.
Yeah, about the pharma names, I think pharma, after the real 2020 COVID run, they've never had a long sustained bull. So they do well in parts. When there's a COVID scare, they do well suddenly for 2, 3, 4 months, and then they start coming down. So the trend is not visible in pharma that it was earlier. So we don't own pharma, but I don't think pharma is so much of an issue because pharma normally is lacking to deliver on the earnings front. So that's the main point which I think would affect the real outperformance from the pharma space as such.
I'm going to go back to that point. You said 2023 is going to be the year for mid and small cap stocks. So just let's delve further. Let's understand what are some of the themes. Would you like to share, some stocks as well that you would look at for the new year?
Theme is, I think, mid and small cap is like a plethora of options for you. So you might have a turbine company, you might have companies that are doing ethanol, maybe they're doing well. So in mid and small caps, it's more about bottoms up. It's not so much about trend because the trend normally forms in the large and the mid cap space. So the small caps normally is about individual stock picking. It looks cliched, but I think if you really want to play a theme or a small theme or a subset of a theme where you say, okay, I'm okay to lose a little bit of temporary money, but for the long run, I want to make it big. I think the small cap IT should do well. The mid cap IT should do well. So, see, and one thing is, it's been about 12 months or maybe 15 months of struggle for these IT companies. And they have not gone down on profits. Yes, you might have assumed that they'll grow at 20%. They grew at 15 or 16 or 17 or 14 or 13. But the thing is, most of these are down 40, 50% from the top. And stocks normally don't fall more than 60, 70% unless there is a survivorship crisis in the company. So they're already down 40, 50%. So if these companies deliver earnings, even at, let's say, 15 or 20%, you would see the all-time highs come back again after, say, 1.5 years. That's the maximum I'm telling you. So in 1.5 years, many of these smaller companies that have been beaten down, even while their earnings have gone up, they've not come down. Of course, our expectations would have been different and the actual delivery would be different. Many of these stocks could double over the next 12 to 15 months. That's the proper way of looking at them.
One can't ignore the looming fears of recession in the next year, COVID making a comeback. There is going to be the election event as well that's down the line. What is your outlook as to, what could be some of the big risks for the Indian equity markets going into next year?
I think this is a much awaited, much talked about, much discussed, much analyzed, and much researched recession America would have ever had over the last 3, 4, 5 decades. So it's like saying share aaya, but one day the share will come and nobody will care a damn. So many say America is already in a recession. Many say they might come into a recession, but it's just about spending the next 2, 3 months on the pitch. Like they say, if you play for 10, 15 overs, the runs will come. So you have to survive. We've all survived the last so many months. assuming that the companies would deliver earnings. So even if recession comes, I think it's all in the price. You would see how the Nasdaq moves. You would see how the small caps move. So the mid caps have already come up a lot. So most of the mid caps, they are nearing their all-time highs. It's just about the small caps in India, and the large caps obviously is telling you that the Indian market is different. But the Indian market, I think, is different not because of the earnings potential, but because of the local money that is flowing in, and they have actually helped to save the market this time. So I think even if a recession comes, it's already there in the price. It'll go away. I mean, America is not Japan. America can't be in recession for 20 years. Japan was in recession for 20, 30 years. So if it comes, it goes away. It's like that. You have to look at it like this. So you've got to say a friend in Chandni Chowk who sells say tires, and he says, इस बार ईद और दिवाली की बिक्री अच्छी नहीं हुई. So what do you tell him? तुम दुकान बंद करके घर बैठ जाओ. You don't say that to him. बिक्री नहीं हुई, अच्छी नहीं हुई, 6 महीने बाद बिक्री हो जाएगी, होली की बिक्री हो जाएगी, अगले साल दिवाली में बेच लेंगे. So it's like that. You have to look at recession as a part of life. It's not life and death. It's just part of life.
A lot of talks about recession, as you said, but 10-year yields are not coming down. What sort of an impact will that have? We've seen unprecedented rate hikes, of course, which you have said that market has already tried to price in, but definitely it will have an overall impact coming in the next year.
So Pankaj, if you want real quick reaction from the Fed and a big rally, hope and don't pray, but just hope that one of the big banks go belly up. Rato Raat, they will come and have a 100 basis point cut. Otherwise, the 10-year is right now discounting what the Fed will do. What I'm saying is over the next 3-4 months, the Fed is saying higher for longer, higher for longer. But they also said that inflation is transitionary. At 7% mortgage rates, Americans just can't buy a house. It's just out of the window. So the moment you have the slowdown, like yesterday, the Dow and Nasdaq went up because the jobs report was bad. So we are in a situation where bad news is good and good news is bad. So you want bad economic data, the earlier it comes, better for the markets, because then the Fed will be forced to get the markets down, get the interest rates down. But yes, right now the 10-year is not coming down. But then you had 7 rate hikes this year. So I think it's just a matter of time. Like I said, you spend 2, 3, 4 months on the crease, on the pitch, play the ball, and then you see how it happens.
And here's hoping that we hit a 6 or hit it out of the ballpark, at least when it comes to the markets. Basant, it's been a pleasure interacting with you. Thank you so much for taking time out and giving us your pearls of wisdom. Don't be a Rambo in the markets. If the markets fall, everything falls. And of course, here's wishing you and your team a very happy and prosperous 2023.